let's go to our very first presentation today. Our keynote speaker, Jay Sugarman, Big Money, Lessons from the Worlds of Collecting and Investing. Jay is the CEO of Safehold Inc., ticker SAFE. Jay, good morning. Is that a real background? That's a real background, right?
Real background.
There, you're bringing the class today. Bringing the class. I like it. All right, Jay, I'm going to give you the floor. I know you've got some slides that you're going to share with us here shortly. Let's get into it.
Awesome. Well, thank you to the folks at Benzinga for having me today, and thanks to everyone for listening. Everyone seems to be talking about how to make the big money in the markets, in the collecting world, and so I thought it might be helpful to try to make some sense of it all and maybe add some perspective from my own experiences. So big money are those opportunities where values seem to go up and keep going up. And I've been collecting coins and comic books and baseball cards since I was a kid, and investing in art and companies for almost 30 years. And this market is unlike really anything I've ever seen. So how do we make sense of $69 million digital art, or $5 million baseball cards, or $500,000 handbags? Who's making all this money, and how can we participate? And I know sometimes it feels like you're just putting your money on 12 red and hoping, but I think if we take a closer look, we can take a few key lessons away from all these examples and maybe make some better choices when it comes to picking companies and stocks. And so let's start with a simple question. What makes something valuable? And two things are really critical. You need scarcity. It has to be unique and rare. And you need desirability. You need what economists would call low supply and high demand. And things really become worth big money when you can do both those things. You can find something that's scarce, that everyone wants, and that no one can get. And we're going to talk a little bit today about scarcity and desirability in the context of collectibles, but also in terms of companies. And we'll talk particularly about a company we started 5 years ago that we think actually has both those characteristics. So let's start with why both are important. So there's lots of things that are desirable but not scarce. And those are not going to ever really be worth big money. On the other hand, we know a lot of things that are scarce but not desirable, and they're also really never going to be worth much. So we look at the world of collecting and say, okay, well, where do we see scarcity and desirability, and how valuable is it to get them right? And I mentioned I've been collecting coins since I was a kid. One of my favorites is the Morgan silver dollar. It's a beautiful coin, a lot of history from early America. And here's something where two coins, 2 years apart, minted in the same place, same condition, beautiful strike, crisp color and edges, just beautiful coins that look very, very similar. The one on the left, very desirable. It's a beautiful coin, very strong strike, a great luster, but there's lots of them. And you can buy one of those today for $800. 2 years later, the 1883 S&M MS67 recently traded for $161,000, 200 times more valuable. Same coin, just a lot more scarce. We look in the baseball card world. Warren Spahn, very fine pitcher for the Braves. 1952 Topps card in PSA 9 out of 10. Sharp edges, great colors. Sells for about $5,000, $5,200. And of course, Mickey Mantle, same year, same condition grade, same beautiful colors and sharp edges. Just traded for $5.2 million, 1,000 times more. Go to the comic book world. Nice, crisp Richie Rich. Very scarce, but not so many people looking for it. $8,500. You look at that Action comic, same mint condition, but this one's got Superman on the cover. Traded for $850,000, over 100 times more. And then, of course, that ultimate collectible art, one of my favorite artists, Jean-Michel Basquiat. piece of art that in 1982 you could buy for $4,000 recently traded for $110 million, over 25,000 times appreciation. And art is that one place where scarcity and desirability can really lead to big money. So all this makes sense, right? But what does it have to do with investing? Well, when you're looking at companies, the same things are true in the world of investing. So scarcity and desirability are really critical. And in investing, actually, the rules are pretty clear on how to see if something's scarce and desirable. So let's talk about that. So you have these two concepts, scarcity and desirability. We want to talk about first, what makes a company desirable? What makes a business something you want to own? And I think we could all agree that a company that was strongly profitable would be a good thing, something with high growth. And how about some downside protection? So lots of upside, my downside's protected, making a lot of money. That makes a company pretty desirable to investors. But it's tough to find all three of those. So we've all seen examples of companies that are very high growth, but not profitable. We've seen companies that are profitable, but the prospects for growth are not very good. And we've seen areas where you can invest with high growth potential, but not a lot of downside protection. So when you find all three, you've got something special. And what about our second attribute? What about scarcity? What makes a company unique or rare? And when we look at businesses, we can do the same analysis and say, how about three things that make a company really unique? Dominant market leadership. There's usually only one of those, dominant market leaders. Somebody who's actually got to scale first, who's achieved the economies of scale in a business, usually is pretty unique. And the company has the best access to capital, has the lowest cost of capital, usually has a big head start on anybody else and is pretty rare. So those are the things that when we look at stocks, we start to think about what makes a company or a business scarce and desirable. And we know if we can get both those things in a company, we've got something that can make us big money. So for the 5 years, starting really in 2016 and 17, my company started looking around to find places where we could make that kind of investment. And we started a new company that went public in 2017 called Safehold. Now, I'm not going to talk about Safehold a lot today. You can listen in to my colleague Ian Seelig at 12:15. But we started an entirely new industry, an entirely new business. And we are the creator and leader of the modern ground lease industry. And if you're interested, I think if you listen to Ian, you'll find some really interesting things. But I'm going to talk about it more in the context of scarcity and desirability and this opportunity for big money. So we talk about desirability. We gave some of the attributes of desirability: strong profitability, high growth, good downside protection. And we're going to take a look at Safehold real quick. On the profitability side, pretty good check mark. You can see net income up very significantly, over 160% annual growth. Revenues growing very strongly. In terms of growth, this is an enormous business opportunity. It's probably the best one I've seen in my career. We've already grown 11-fold since our IPO 4 years ago, and we're building up significant embedded capital appreciation for shareholders. That's grown from 400 million to 6 billion over the past 4 years. So profitable, growing fast. How about downside protection? Well, during COVID, 100% of our income and rents came in with no hiccups. And we've actually had a third party when we started the business take a look at what we were building, this modern ground lease industry. And they said it's incredibly safe when compared to other investments in the commercial real estate industry. So we think we've got that unique combination, strongly profitable, growing very fast, very protected underlying asset class. And we are pretty unique. And so this is the other half of the equation. We are the dominant market leader. We think we have the best access to capital. We think we've reached scale way before anybody else will. And we'll just show you some quick numbers. We're the only publicly traded ground lease company. So it's great to be the only one. We're by far the biggest. We're the only investment grade pure play ground lease company. So we have a big cost of capital advantage and some of the longest maturity profile on our liabilities. So one of the safest, strongest balance sheets. And we're the only nationally scaled platform executing on behalf of our customers all across the country in one of the largest markets in America, a $7 trillion commercial real estate market. So these are really interesting ways to identify great companies. It's how we set out to build Safehold, and it's why we're so excited about what's going on at our company and in our industry. And when you get the scarcity and desirability equation right, good things happen. Here's a quick stock chart. Number one performing NAREIT member over the last 2 years. Stock has increased 350% since our IPO 4 years ago. And we're very, very optimistic about the future. We think we've really created a new asset class, a new industry, and we are the clear leader. But more importantly for today, and as you think about some of the other presentations you hear today, think about those two ideas, scarcity and desirability. Who's the dominant market leader? Who's got the best access to low-cost capital? Who's got economies of scale working for them? And if they have all that, and they are strongly profitable, and they have the prospects for high growth, and they have good downside protection, well, that's where I think you're going to see the big money. And you'll do very well if you get this part of the equation right. And we look forward to talking more about Safehold with you, but also hope you can find other companies that can hopefully make you big money in the future. So 12:15, Ian Seelig, Safehold. Love to continue the conversation. I think you'll find it fascinating how we've built this business, how we are changing and revolutionizing the modern ground lease industry, why our customers are happy, why our shareholders are happy, and why the future looks very bright. Thank you again for listening.
Thank you very much, Jay. And before I let you go, can I? Did you catch the headline about the Honus Wagner card, the record? Since you talked about collectibles, I just wondering, if you saw that, because that was a big number.
$6+ million.
Yeah.
Mickey Mantle had the record for a couple weeks.
Yeah. What do you make of that? I'd love your thoughts as
Look, what we're finding in the marketplace, whether it's collectibles or stocks, is people want the best.
Yeah.
And the values of the best keep going up. And if you can find something that's not only desirable, but very few of them exist. I think there's only 60 of those Honus Wagner cards, and that one in particular is fairly unique. It's got a great provenance. I think Wayne Gretzky owned that card. You look through that kind of dynamic, and when you see those opportunities, they're pretty special. We look for companies like that. We look for businesses like that, and we think the same dynamic holds. So looking forward to listening to some more of the presentations today.
Great. So as you mentioned, your colleague Ian will be back on about 3 hours from now, actually, 12:15, to do another presentation. But Jay Sugarman is the CEO of Safehold Inc. Ticker up on the screen, SAFE. Jay, thank you so much. Feels like we are in a bit of a resurgence for the whole collectible industry. So it was great to hear you talk about that. So thanks a lot for joining us today.
Take care. Thank you.